Welcome to After the Paycheck, the series dedicated to helping people to and through their retirement process. I'm your host, Adam Bly. This week, I am here with Ryan Marston, partner here at Rubino & Lang Wealth Partners.
Pleasure always to be here with you, Adam.
Always. I like how we're getting to a point where we can see each other more often.
I know. It does feel like things are slowly getting back to a little more normalcy, right?
Yeah, I was reading an article that they were saying that this social distancing and mask wearing might continue for a few more years just because of variants and everything that are going on.
Yep.
But I think just that slight reprieve is really what just people need right now.
Socialization. Get out of your house a little bit just to kind of get out of the whatever routine you've been in for a year now, right?
I was telling Regina that Kristen and I have desks. We got conjoining desks to make room because Daphne needs a little bit more area to play with her toys. So all right, we'll get desks that are together next to each other. And with the thought process that was back in March, okay, we're going to do this for 6-8 weeks maybe.
Yeah.
Now that it's a year of us working next to each other, we're like, all right, maybe maybe we're going to need to get out
I'm
more.
going to go into the office today.
Yeah. Kristen, I love you, but sometimes you just need to be able to get out and socialize a bit. We are continuing with our episodes here, following up with, at the end of last year, we sent out a little survey to people that are subscribed to After the Paycheck, and we asked their feedback on some topics that we should go after this year. And a lot of people responded with questions about healthcare in retirement.
Yeah.
There's a lot of confusion about the times when you retire. What does healthcare matter? What are my options, when that happens? What is it going to cost? Stuff like that. So I figured with today's episode, we'd go over kind of that journey, maybe some scenarios that people are in, and then just kind of play that out from there.
Yeah, and I agree. We when I sit down with people, and I think a very common question is a concern is about healthcare and Medicare. And if you're retiring before 65, can you do it? What do you do for health insurance? And if you are 65 and retiring, what's the process? So that's a very common question and concern we see a lot.
Yeah, you would. Well, I guess not. You would think, but I would imagine if retirement and all of these things about if I'm going to have enough money to retire or maximizing my income sources and everything like that, healthcare is not something that also should be at the forefront. But it is. As we can tell from the responses that we got, that it really does become a very important factor.
It is, because there's a level of financial risk if you're not insured properly, just like anything else. That can really severely jeopardize your retirement if you don't plan for it or insure for it in this case. So,
right.
Yeah.
And a lot of people are aware now that you can't get Medicare unless you're over 65, right?
65 or older.
65 or older, okay.
With other certain circumstances for disabilities if you're younger, but for the most part, 65 or older.
Okay, and that might be something we can touch upon. But let's kind of go through that. So let's go over options first for people who want to retire before the age of 65, whether that be by choice or for medical reasons, and then what your options are, and then if that's an available choice to you, and if it's a viable choice to you.
Sure. So if you're considering retiring before 65, the first thing you should do is contact or go to your HR department at your company, because they might offer some level of insurance or continuance of the insurance plan that you're in now.
Okay.
Right? So that would probably be the ideal situation if you get continued insurance through your company. That would get you to that 65 threshold, and then that would stop, and Medicare and supplements might kick in. And then if that is not the case, under the Cobra Act, that if your company that you're working for currently is 20 or more employees, you can actually get Cobra Insurance, which is a continuation of that same group health insurance that you were on with your employer. So that would just continue. The downside is you're probably going to have an increase in what your cost is, because you have to cover. You got to cover both sides now. But that that if you project for that and plan for that, that might get you to 65, depending when you retire, because that can go. Cobra covers up to 18 months. So nothing more than that. And then the other option is just self-insuring through a company and exploring different options. The Blue Crosses and Blue Cross Blue Shield in Massachusetts or Transamerica. There's a lot of options. Okay. We live in a state in Massachusetts, and if you are watching in from Massachusetts, that we have the Mass Health Connector, which is great. And we were the first state to actually have a forum of health insurance plans. I think it was in the early 2000s. Mm-hmm. So if you go on the Mass Health Connector, you can actually exploit all your different options for healthcare. If you're before age 65 and want to see what's available.
Okay.
Yeah.
So we just ran over like three things real quick, right? So
Yeah.
there's that option to potentially continue to be covered by your employer.
Yeah.
So if I'm 62 and I go to my employer and say, you know what, I've had a good run here, but I think I have enough to retire and I'm out. What is the likelihood that my employer is gonna be okay with still paying their share of insurance for me to still be on, even though I'm retiring?
Probably less likely.
Okay.
If I had to guess, right? It depends on your company and their benefits that they have in place. So, I would say less likely. Is that something I should look into before I consider making that move? Any of these options you should make sure, because there's a different level of cost with each option. And if you're not planning for that and you retire and all of a sudden you're surprised with, oh, wow, this is the healthcare cost. We have to pay, you might be paying $20,000+ for a family plan that you weren't projecting until you get to 65.
Right.
Which is a big cost, obviously. So you want to make sure you're exploring whatever option it is before you actually decide to retire. That's definitely for sure.
Okay.
Yeah.
And then you started to then go into Cobra as that, if your employer doesn't give you that option.
Yeah, as long as you were working for that company that, again, is 20 or more employees.
Okay.
The Cobra Act states that you are entitled to Cobra Insurance for up to an 18-month period, which is a continuance of that group health plan that you were on. But again, the premiums or your costs might be going up because now you're covering both sides or the 100% of it.
Okay.
Yeah.
So your cost might be higher, but it might be a good option if you have really good health insurance.
Yeah, and that probably is only a good fit if you're just over 63 and want to retire, right? Because 18 months.
Right.
And so if you're even considering retiring even before that, you might just want to look into private health insurance options and weigh the different options that are available based on what your needs are.
We'll probably get into this too in a minute, but just to kind of foreshadow, for Medicare, is that a life-changing event? So I know, now, as if someone who's working, I only have certain enrollment periods to change my health insurance options.
Correct.
Is the day I turn 65 one of those cases where I can enroll in Medicare? Or is it should I time if I'm going to be on Cobra for 18 months or I only have 18 months, should I make sure it falls within this window of where the portal is open for me to get Medicare?
So Medicare has a few different enrollment periods.
Okay.
So the first is, so if you retire early, and let's just say you took Social Security benefits, right? And this is for Medicare A and B.
Okay.
If you are already taking Social Security, you're actually automatically enrolled into Medicare. You don't have to actually do anything.
Oh,
they'll send you a packet 3 months before you turn 65 and say outline everything.
Oh,
for you.
okay. So I don't have to go online
Nope.
okay, awesome.
If you are collecting Social Security.
Okay.
If you're not, then the first enrollment period is actually the 7 months surrounding your birthday.
Okay.
So 3 months prior, the month of your birthday, when you turn 65, and then the 3 months past.
Okay.
So that is the first enrollment period beyond that. The second enrollment period would be actually surrounding your when your coverage lapses or ends on your group plan.
Okay.
So that's actually the 8 months post that period of retirement, and when your whatever private insurance would stop at that point in time. And then the third is actually just January to March of every year. So January 1st to March 31st, open enrollment period at that point.
So there's a lot of opportunities for you to get enrolled in Medicare when it's that time.
There is, yeah. There is, yeah.
So there's, I'm just making sure that it's not like one of those things that it'll slip by your mind. I just realized my license expired and I just never renewed it because everything going on. And I got an email reminder hey, you haven't done this yet. So I was thinking with Medicare the same thing. If you forget, not that
well, you can't. The thing is, there's a qualifying period for it. You can't just not do it at 65 when you were supposed to have done it, right? You have to have a qualifying reason why you didn't actually file for Medicare A and B, and continued work or on your spousal benefits or other insurance, right? And if you don't, it's actually one of the more severe penalties the government enforces. If you actually do not enroll in Medicare.
What would some of those be?
It's 10. So the problem is it's forever, right? And this penalty. So it's 10% annually for your premiums. That 10% penalty, and that accrues each year. So it could be 20, 30%
Every
on
time
what the
you forget
premium
to-
is, but that lasts the rest of your life
Okay.
if you forget to enroll. Yep.
So that's very important to remember.
It is.
Okay.
It is.
And we'll come back into,
Yeah.
again, that Medicare costs and everything like that. And there's different parts of Medicare. But to come back into retiring early, we just went over Cobra, again, the cost of that and how that might not be a very viable option because you got to cover both sides.
Yeah.
What if my spouse was still working? Let's say, my wife or my significant other is going to work for another 3 or 4 years. Could I hop on their insurance? Is that an option?
Yes, that's something I forgot to mention, actually.
Okay.
So let's say you are 63 and you're retiring, but your wife's going to continue working, and maybe she has a group health insurance plan.
Yeah.
That's pretty beneficial, and you can actually just jump on that
Yeah.
and get those benefits that would cover you until 65, and then again file for Medicare at that point in time.
Okay.
Yeah.
Is there a point where, because it's a changing factor for me turning 65, does that affect her health insurance, or does she have to do anything on her end at that point?
When you would turn 65?
So let's say I hop on Kristen's health insurance.
Yes.
And then I
So
turn 65. Do I then have to go to her health insurance provider and say, hey, I'm 65, I'm coming off now? Or do they?
More
know?
likely than not, you'd probably have to go to Medicare at that point in time.
Okay.
The cost for her in the company would obviously go from like a family plan down to that single individual. That's a big savings.
Oh, yeah.
Right. So that's a big difference. And that's usually why they would make you, go towards that Medicare version option. So.
Okay. Okay, that's perfect. I'm trying to think if there's a reason why I'd want to stay on my spouse's insurance instead of Medicare.
Each plan and company is going to be different. They might allow you to.
Okay.
It depends on the benefits. You're going to want to weigh them. Sometimes it's actually a cost. You can have similar benefits with Medicare and actually have a cost savings. So even if you're say you're 67 and still working and have company health insurance, you still want to look into Medicare because you can have the same type of benefits, but it actually might be a cost savings in certain situations.
Awesome. So it might be fiscally prudent for you to actually look at the
exactly.
reason why you want to move.
Yep.
Okay, that's a great That's a great point you're making. And then the other option is, again, if none of those are available to me, if I can't hop on my employer's insurance, I can't hop on my spouse's, I can't use Cobra because let's say I'm 61 and I want to retire or I need to retire, my other option is what? Is to just browse the marketplace?
Yeah, you can browse the marketplace.
You mentioned Mass
Health
Connector.
and the Mass Health Connector. If you go there, you can see what's available. You put in your what you're looking for, your statistics, and you can see what types of plans are available for you, whether it's a single, family plan, etc., and types of benefits.
Does the price affect based on what my net worth is? Let's say I have, $500,000 saved up for retirement, but a lot of it's in 401ks versus savings, or is it income based, the health care provider?
It's going to be more income based. Okay. I guess the thing that it can affect less, I think, on the private insurance side, and more about with Medicare and premiums, and you can actually have surcharges if you're on Medicare if you're making too much income. Okay. Not necessarily net worth, but if you have too much income, you could see a price increase because of premiums, and when you're on Medicare.
Okay. Yeah, that's good to know. So actually, do you want to get into that?
Sure.
Or we'll just move our way into Medicare. So let's say now I'm at the point where I'm eligible for Medicare. What you said, they send you a packet and they kind of let you know, hey, it's time.
Well, that's if you are on Social Security.
Okay.
All right. So they don't just send you a packet just because you're 65, right?
It's not like AARP.
Exactly. You have to be the one that goes out and pursues this and looks at your different options.
Okay.
So when you're looking at enrolling in Medicare A and B, those are the two general ones that you're required to. They don't cover everything. That's the downside, right? Okay. And that's why you hear about all these, the alphabets of Medicare, right? A, B, C, D, et cetera, right? So A and B cover about 80% of potential medical costs in your retirement. So using an extreme example, I guess. If you unfortunately came down with, cancer or something like that, and we know what the costs potentially are of that, hospital stay and all the treatments, etc. If there's a cost of $100,000, you actually might if you just subscribe to A and B, you might be on the hook for potentially $20,000. So 20% of potential medical costs with just A and B.
Okay.
So that risk is unlimited. It can go to any amount. There's no cap on that.
Okay. Okay.
So that's why when you're exploring and you kind of, if you're overwhelmed with like the process, you hear of like C and D, etc. It's to weigh out, it's to supplement what A and B are, to make sure you cover that gap of that 20%, or enhance like prescription coverage.
That was going to be my next question. Like prescriptions, what about like dental insurance and other, or eye vision insurance?
Yeah, so this is where there's like a lot of different options available, right? So there's C and there's D. So Medicare, there's on the gap, that gap coverage, there's a difference between, there's Medigap and then there's Medicare Advantage, okay?
Okay.
So those are the two main options. And with Medigap is when you would get Part D. That's the prescription coverage. So Medigap has a little more flexibility than Medicare Advantage. It's more widely accepted. There's a lot more, I'd say, pros than cons. Medicare Advantage is kind of like a boilerplate type plan where it has everything in one. If you wanted like one type of health insurance like coverage, with some have dental, vision, gym memberships, things like that.
Wow. Okay.
I think the main thing is when you're in your 60s, if you have like a good healthcare team already set up, your doctors and everything, right? You want to see what they would accept in terms of insurance. That's like the main thing I would say. You see what they would accept in terms of health insurance, and then you kind of go from there. Because I don't think you want to make any big changes at that point in time.
Right.
So,
are there? Let's say I have pre-existing conditions. Does that affect my ability to get certain types of Medicare?
So guaranteed coverage. So you don't have to, with Medigap and Medicare Advantage. So once you get in, there's guaranteed coverage going forward. You want to make sure that you can't, they cannot increase premium based on what your health is at that point in time.
Okay.
Yeah.
But if I'm going into it, let's say like I have a skin condition, right? And I'm 65, getting ready to retire. My employer coverage ends. Is there technically a gap in between from going from one provider to another? And could they look at my history and say like, oh, wow, you have to have this procedure done every year. We're going to actually charge you more for premiums every year.
No, but that would maybe potentially change what insurance you want. Right? Yeah. So that's why when you're a year away from retirement, or a year away from 65, you want to make sure, ideally, you get that, like have a full physical done. To see what sort of underlying issues you may have to make sure you get the right type of coverage going forward, right? For said issues, because something could be discovered at that point in time. And you really don't want to skimp on insurance because the risk, the financial risk, is far greater than like what the cost of the premiums could be in the temporary or now. Yeah.
I think that's a very not hidden cost, but unexpected cost in retirement is healthcare costs.
Yeah, it's healthcare costs, long-term care costs. Those go hand in hand, and that can again jeopardize your retirement picture pretty easily.
You said something a moment ago that I think is very important to take away from this. It's planning ahead on this kind of concept of, okay, I should probably get a physical done or get some tests done while I still have my employer's health insurance or whatever it may be, to see what those underlying causes are. So it helps me determine what my best options are, what I'm looking at for Medicare, Medigap, Medicare Advantage, DBCD.
A year out, you get that physical done. And then 6 months out from being 65 or retirement, then you start, you see what your doctor or your team of doctors or healthcare physicians will accept for insurance. And then you start weighing out your options after that. You can go on, again, Medicare.gov. You can start, and then you can do comparisons between the Medigap and Medicare Advantage plans.
Okay.
And for the pros and cons and the benefits that they cover, the costs associated with such.
Cool.
And then the Mass Health Connector, you can go on there too as well and see again what's available for coverage too. So there is a lot of useful tools out there, just kind of navigating your way through and trying not to be too overwhelmed because there is a lot of options.
It is, like you said, like that paradox of choice. Like there's so many options out there that it can really make you hesitate and just freeze and not make any choice.
Exactly. And the one thing I will say is like the Medigap versus Medicare Advantage plans. The Medigap's a little more flexible, where you can actually you can move from that plan to, if you decide you don't like what the Medigap coverage is, to Medicare Advantage in the future, right? Whereas if going the other way from Medicare Advantage, you only have a 12-month period where you can make that change, and then otherwise you cannot.
Okay.
So, you can, I should say, but then you have to prove insurability. Well, insurability for the new supplement insurance.
Okay.
Yeah.
So repeat that again. So I can go from Medigap to Medicare Advantage if need be.
Yeah.
But if I'm on Medicare Advantage,
there's a little more. Yeah, there's some more hoops to kind of jump through.
To go back to something else. If we're talking about the Mass Health Connector, if I'm on Medicare and I don't want Medigap or Medicare Advantage, could I find a private health insurance to supplement my whatever Medicare doesn't cover?
Well, those are what the Medigap and Medigap.
Those what the supplements are.
So supplement Blue Cross, again, I just keep going back to Blue Cross Blue Shield, but like that might be a company that offers that Medigap plan,
Okay, so that's
insurance.
okay.
Exactly.
I was thinking Medicare Advantage or Medigap is the name of the company, or
no, that's just the
terms,
exactly, gotcha. But they're offered by private health insurance companies.
Okay. So again, Medicare.
And then they are held to a standard to offer best rates too. So it's not just like. You want to explore the different options available with the different companies, but they have to offer you the best rates based on like your age and statistics.
Okay, awesome. Yep. So so you don't have to worry about like you said, like Blue Cross versus Athena versus
the benefits may change though. You just that's what you want to weigh the comparisons on.
Okay, perfect. Yep. And I can get a lot of that at Medicare.gov.
Yep, all that. Yep,
perfect. I think that's all I have written down here. Is there anything else that I'm missing or people?
I don't think so. I mean, we could go into 3 hours about this conversation about this. There's a lot of different options. It can be very overwhelming, but just make sure you kind of like map everything out. I think if you do everything in stages, so you don't have to do it all at once. That's the easiest way, right? Like when you're 12 months out, 6 months out from retirement or 65, that's like the best process.
So as this kind of curtails into my overall retirement planning strategy, how does meeting with a financial advisor play into my Medicare coverage, aside from what we just talked about, like hey, you need to budget aside X amount a month?
Yeah, I mean, there's the budget aspect. There's what's my financial risk of you not or underinsuring, right? So you want to make sure like what you're choosing the right plan based on that. And like if you're just not as aware like the pros and cons between the plans, you can always have like someone have a second look at it for you, second opinion on it. But with the proper planning, the healthcare should cost for a married couple less than $10,000 a year when on Medicare in like the supplements. But the financial burden could be so far greater if you don't make sure you're insured enough, I guess. Right.
Yeah. To go back to the beginning, what you said about the whole like if Medicare only covers that first 80%, again, not to like kind of scare people, but like that's a big thing. Like especially with the
I've seen hospital bills and some of those numbers. It's like you don't believe that they're charging for that, but like they can escalate pretty quickly with like a few days stay in a hospital for whatever reason it might be.
I got blood work the other day, and they itemized the needle that they used to prick me, and I was like, "What's that?" Like, But so I could definitely see that.
Yeah, you want to make sure you cover for it. Yeah, because again, the risk is unlimited.
Awesome. Yeah. Thank you for taking the time to go over this. I know that, like, again, the healthcare options and everything are not really part of what we focus on in a wealth management aspect, but it kind of is in the longer overall umbrella of retirement planning. So I appreciate the time to actually go over and sit down and talk about this.
And thank you for having me, and it's always a pleasure to be here.
Thank you. I like being here too. If you have any questions for us at Rubino & Lang Wealth Partners, or have something we want to talk about on a future episode of After the Paycheck, head over to afterthepaycheck.com and just fill out the form at the bottom of the page. Until next time, take care.